right. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Glasshopper77, good afternoon to you. Yeshwant, much love to you. Thank you for tuning in from India. Warthog Thunderbolt, what's up? It's good to see you in here. Crypto Clan World, great to see you as well. R Pink, much love to you. Best mod in the land. Thank you, R Pink, for modding for me. Thank you for being here, and thank you for always doing such a good job of it. Chi-chan, welcome in. Let's see. I hope Bitcoin pumps to 70K after FOMC. Yeah, you guys, there is an opportunity. We are starting to reclaim the anchored VWAP again, which is a kind of a sign of strength. And we did have some kind of dips below it with reclaims in these areas, which did end up making new local highs. So I'll get into that in just a second, but we're reclaiming the anchored VWAP. You can see we even back tested that anchored VWAP. And if we can continue to make new local highs here, there is a bullish chance. Another thing I'll go into real quick, but let me say good afternoon, Ryan. Chad P, much love. I'm super stoked to have you here as well. Adam, Thomas, welcome in. Good afternoon to you as well. Crypto Wander 5813, thank you for being here. Thank you for modding, and thank you for smashing the like button. Guys, do please hit the like button. If you do get any sort of insight into the market from this live stream, or if you're just enjoying the live stream, please hit the like button. Darksby19, Monty, Aradekaskiona, Dr. Goat, and Hassan, thank you guys all for being here as well. So welcome in, everybody. Obviously, Bitcoin's been dumping for a few days now, a week, going on a week now. We did reject from a major resistance area with it, our anchored VWAP and our naked weekly point of control. Now, what is a bit concerning, and I've been talking about this throughout the week and even over the weekend, is that we are falling back inside of our volume profile. And if we look at this range that's been going on since about June 3rd, so almost 2 months now, we attempted to break out of the volume profile, only to reject from resistance and fall back in and pretty much find reacceptance back within this volume profile, which in itself is bearish, right? A failed breakout, you fall back inside, you backtest, you can generally see a big crash to the downside. What we are seeing now, and what we saw I talked about in yesterday's video, is we do not want to lose our POC. If we start to lose our POC, we could see a rotation down to the value area low or towards the value area low, that golden pocket. And we have quite a steep liquidity trail that had been built up in this move to the upside. And it's almost that parabolic liquidity trail in here where you can see we have a bunch of higher lows where we can sweep all of these very, very quickly, kind of creating that long squeeze or liquidation cascade to the downside, and sweep us right into our golden pocket at $61,000, which would take all of that liquidity. Now, the fact that we're losing the POC is another bearish sign, guys, because remember, when we were coming up in, let me just zoom out to the 4-hour time frame, when we were starting to fall back inside of our volume profile, we saw that big imbalance candle dumping us to the POC once we found acceptance inside of our volume profile. That was a bearish sign that you saw a dump in and through, really that, 8 hours in here, a dump in and through the volume profile. Then over the weekend, we saw a little bit of a bull trap, right? We come up to our golden pocket, we reject from a lower high golden pocket, and then we confirm reacceptance back inside the volume profile again, pretty much confirming a low and then a lower high. So we should now, because we fell back inside the volume profile here, be looking for another lower low. Well, could we have just come down to the POC bounce and then maybe made another run to the upside? Yes, and I talked about that in yesterday's video. We really wanted to hold the POC. We really wanted to hold also our anchored VWAP. But you can see we dumped straight through that POC with another volume imbalance candle. We dumped straight through that POC. That is not a good sign on the charts. It is a sign of weakness. Now, we are coming down to some local support. So let's talk in terms of our ranges, our volume profiles, our important volume levels of support and resistance. We have this 2-month long range where now we're obviously back inside the volume profile and below the POC, meaning we could see a rotation down to value area low. But we also were looking at last week the smaller volume profile that was going sideways. So we have our initial aggressive pump to the upside here, and then we kind of started going sideways and up in that channel. And I'm going to bring that channel up in just a second as well. And I talk about this a lot on my channel, but you get the initial pump followed by that exhaustion, whether it's in a downtrend, it's a descending channel, it's selling exhaustion. In an uptrend, it's buying exhaustion that you start seeing after that aggressive pump. Well, if we look at that range, that upwards channel-y range, this structure where it kind of starts to round off a little bit, and we turn on that volume profile, well, you can see here we're bouncing at some pretty interesting support. Local support, I should say. It is the value area low of that range. It is also the very close to the one-to-one trend-based Fibonacci extinction. So I'm going to go back in on the 1 hour chart. If we're looking at more of a corrective move from the range highs, if we're looking at a zigzag correction, impulse, correction, impulse, you generally want to end that zigzag correction between the 1-to-1 and the 1.236 Fibonacci extinction targets. Now we have come down and we pretty much hit the 1-to-1. We've very, very slightly front run it. And I think we're front running it because we are hitting the value area low of our range. And we saw a nice kind of big bounce from the value area low of the range. Also, within this move to the downside that's occurred so far this week, we have a 1, 2, 3, 4, 5. We do have a 5-wave impulse. In this guy here, we had that expanding diagonal. So even though it's a very rare impulse or motive wave in Elliott waves, there is a valid count for an impulse correction impulse. So the bulls essentially need to step in here. We need to get back above that POC, and we need to even get back above that value area high. You don't want to see another double top liquidity grab, something like a little sideways range in here before continuation to the downside. Now, is that my most probable scenario to happen? No, guys. I do think we could continue dumping here, and I think we could continue down to 61K, and maybe after a bounce from 61K, we could be coming to take out our 57.7K lows. But I also want to show you guys, let's throw on that buying exhaustion channel. So we got the initial aggressive push to the upside, and then you start to see that buying exhaustion channel. Wrong one. There we go. And look at where we're bouncing. We're also bouncing at the bottom of that buying exhaustion channel. We did see a little bit of a fake out of that channel to the upside just to come into resistance and then fall back inside of it. But you can see the channel even this week was being respected. We saw a small bounce from the midline, and then once we lost the midline, we came down to the bottom. So this is definitely a local support area, a zone of support. We have now broken market structure bullishly on the 1 hour time frame by breaking these internal lower highs. We now can say that at least on the 1 hour chart, we have a local bullish market structure break. And you can see that bullish market structure break had some bull divs on the chart. Yes, on NAMI or on Market Cipher, they're a little bit wonky, but you can see the bull divs. You can see the multiple drives of bull div on NAMI as well on the 1 hour time frame that did give us that push up. And if we go to our 2 hour time frame, NAMI, they're not the most, I guess I would say, it is confirmed because you can see it went from purple to blue here. So we do have confirmed 2 hour bull divs on NAMI, and the money flow is attempting to cross back up into the green again. And if we look at our 4 hour chart, okay, no bull divs on the 4 hour on NAMI, but on Market Cipher, we do have, and actually, let me see. Yeah, it's more of a double bottom on NAMI. But on Market Cipher, we do have some 4 hour bull divs between the lows that were made on Friday and the lows that were made today. You can see now with that momentum wave showing the green dot and starting to roll to the upside, we do have 4 hour bull divs confirmed on Market Cipher B. So there is a sign of hope here, guys, that we could see a continuation to the upside, or maybe even a bigger bounce to the upside. But we got the bullish break in market structure. So let me go back to the 1 hour chart. We got the bullish break in market structure. And with that push to the upside, we were able to flip that anchored VWAP, which is an important trend-based volume support. It's based off of volume, which is more important than the price action. It's where the volume is located within that price action. And you can see for the most part that anchored VWAP, yes, it has some, chop around it sometimes, but it is generally holding as support. So the fact that we're getting back above our anchored VWAP is a bullish sign to me. It's also a somewhat bullish sign that we even came down after breaking above it. We came down, we back tested it, and so far it's holding. Now, is it going to continue to hold? If it doesn't, I would expect new lows to be made below today's low. But as long as we're maintaining now and flipping that to support on a local level, that does mean that we could see a move up to your POC to continue pushing up to the POC. I talked about this earlier today in the Telegram. I made a post about watch this POC for rejection now, guys, around 64.1, 64.2. We really need to watch the POC because it's the POC of our buying exhaustion channel range, but it's also the POC of our 2-month long range. If we turn on that 2-month long range, you can see that POC is in the same exact area. And now that we've lost that point of control, which is where the most volume is traded, or your fair value for the asset, we could see a sell-off. If we get to that fair value, we could see continued sell-off there, which if we see continued sell-off here, I would expect that we're going to break our smaller volume profile to the downside, and we're going to come near the value area low of our larger volume profile. But yeah, flipping the anchor VWAP is a somewhat local sign of strength. We also got that bullish market structure break. We are kind of back testing those highs. Now, one thing that we need to watch out for, because we did have a valid 1, 2, 3, 4, 5. We had a valid impulse to the downside from the Sunday highs. After making today's low, we need to watch for, that push up, corrective move, and another push up. If we see a 3-wave low volume move like this and we start to reject from this POC, then we could see another impulse to the downside or, new lows being made. And I got where we really need to be watching for this local move that's going to be happening throughout today and coming into tomorrow to see how we react once we get up there. Now, if we break above the POC, then I would expect a move up towards the value area high of the ranges again to backtest those value area highs. If we look at, we have that daily level that is just above the value area highs and naked daily level just below the value area highs. And I believe, let's see, naked weekly. Okay, naked weekly is a bit higher. All right, let me check the chat here. Welcome in, everybody. Thank you so much for being here. God bless all of you as well. Thank you, Dr. Goat. People, hello, Divine Hood Trading. Thank you for always sharing your knowledge. I had a question after you give a rundown, and when you have time, where do you place your anchored VWAPs at? Monty, that's a great question. Anchored VWAPs are very, very important and powerful tools, right? So knowing where to place those anchored VWAPs is key. Generally, you want to place those anchored VWAPs from key swing highs or swing lows on your price action. Now, if you're in a sideways range, like for the past 2 months, you can see here for the past 2 months, we've been in this sideways range. And you can see that, well, I could even take an anchored VWAP from the range high, which is at 67,250-ish. We could put an anchored VWAP on from that range high and look at where we bounced also. So we've been maintaining above not only our anchored VWAP from the low, but also our anchored VWAP from the range high. So far, Bitcoin is seeing a bit of a correction to the downside or a little bit of a local crash to the downside, but it is still maintaining overall, flipping the bearish anchored VWAP. This was our bearish anchored VWAP. We flipped it to support, made new local highs. Flipped it to support, made new local highs. Flipped it to support, made new local highs, So as long as it maintains as support, we could come up and make new highs within this exhaustion channel. Now, once you start to lose those anchored VWAPs, you are looking for pretty much a reversal, a bigger reversal and crash to the downside, and you would be looking at, coming towards your range lows or your value area low. So to answer your question, the anchored VWAPs are placed from important swing high and swing low pivots. Now, if you look at our rejection that we saw at the highs, when was that? That was on Tuesday, July 21st, our local highs here. you see there's an anchored VWAP there. And why did I pull that anchored VWAP? Why did I have that anchored VWAP on the chart? Well, let me just zoom out to the daily time frame, and you can see it was from our last weekly swing high at $82,800. So I have an anchored VWAP from that swing high. Now, also, you can see we bounced at $57,700 from a anchored VWAP, and this anchored VWAP is our most important support-based anchored VWAP in the entire bull market, right? Because it's pulled from the bear market lows. So these anchored VWAPs are just very, very powerful tools. It's a trend-based volume support. And if you're in a downtrend and you come up to an anchored VWAP and you reject, it's pretty much confirming more of that downtrend, right? That trend to continue. And you can see when we rejected from 98,000, it was our most important anchored VWAP from the all-time high. Rejection here, new lows. Rejection here, new lows. And even though we front ran it at $82,800, we pretty much came up to it. Rejection from that anchored VWAP. What did we get? New lows. So those anchored VWAPs are just very, very important. Oops, let me just. Very important volume levels to be looking at within the local sideways range. So we have a couple ranges to be looking at as well. Let me clean up this chart just a little bit here. We have our range that's been going on for about 2 months since June 3rd. And we also have a larger sideways range that's been going on since February, since those 60K lows. Those are your two sideways ranges. So when you're in sideways ranges, it is very important to be looking at the anchored VWAPs from the high of the range and from the low of the range. Okay, so that's in our larger 5-month long range, right? 4, 5, 6 month long range from February. We can turn that on and you can see the value area low of our 5-month long range is also going to be coming in our box of support, our golden pocket box of support. SFP right around $61,000. We, for the first time in this week, are losing the POC of our 5-month long range. That is a sign that we could rotate down to the value area low. Okay, we have to have a bias now that because we're below the POC of the range, we have a high likelihood of rotating down to the value area low. Now, we can zoom in even more. We have our 5-month long range, but we also have a smaller sideways range that we've been in for 2 months. Very nice sideways range to trade. If you pull the anchored VWAP from the highs and the lows of that range, that's also something you want to do. Swing high and swing low of the range. And you can see pretty much how well those anchored VWAPs have been respected. If I zoom back in on like the 4-hour chart here, and let me just go ahead real quickly and take off the anchored VWAP from the low. You can see the anchored VWAP from the high. Very, very trend-based volume support. Very important trend-based volume support. So once you break above it, if you backtest it and it holds a support, you're expecting the trend to continue in a bullish fashion, right? And so that's why right now today, the anchored VWAP from the low is also really important. And yes, we are chopping around. And yes, you can see they're splitting apart a little bit here. But this general zone of these anchored VWAPs it's a support, right? It's a volume-based support. And volume's not just one specific level. It's kind of a zone where most of the money was traded. So very important. And if we lose these anchored VWAPs, you would expect a rotation down to 61K. We also have the most important thing. So I talk about this a lot on the channel. The two most important things to look at in the market as far as technical analysis goes are volume and liquidity, with liquidity being first and volume being second. And the fact that we have such a steep liquidity curve in here, and we're losing volume-based support and flipping it to resistance with our POC, very high likelihood that we rotate down to 61K. Unless we can reclaim by the end of the day, unless we can reclaim that POC, if we can reclaim that 2-month long range POC, which is going to be around 64,100, 64,150-ish, then we could say, all right, you know what? It was a bit of a fake out to kind of hit that 1-to-1 target, that ABC target. And maybe now we're going to see an impulse to the upside to take out, your highs at 67,000. But great question, Monty. All right. Patrick, welcome in, man. Good to see you in here. Is that a Jesus take, the wheel pattern made famous by CryptoFace? You know what, Dr. Go, I am honestly not sure what that pattern is. I've heard of that pattern from CryptoFace, and I've heard him talk about it before, but I don't think I'm too I haven't watched enough of his content to be familiarizing myself with that pattern. So couldn't answer that question. I'm sorry about that. Lil Rick 69, welcome in. Peoria Beat, welcome in. Hey, what do you think about short at anchored VWAP from the local highs again? Last night worked nicely. So yes, all right, because our 67K highs are so close to our previous range highs or our current range highs, you can take an anchored VWAP because this is another important swing high within this range, or I should say it's another important high within this range. Even though it's not the absolute high, it is another important high. So yes, now we could even take that anchored VWAP and throw it on from that high. And look at what, guys, volume-based, trend-based volume support. So let's zoom in here and look at how many times we've been rejecting from this anchored VWAP. I will hide these other anchored VWAPs to get the confusion off the chart here. But look at this anchored VWAP. You reject, you lose it, you get the three-wave move up. Yeah, it's a little bit of momentum above it, but three-wave corrective move up to your golden pocket, you reject. You make new lows. You come up again, you reject from the anchored VWAP, you reject from the anchored VWAP, new lows being made. Come up again, reject from the anchored VWAP, new lows being made. So, yeah, and then even this Sunday and Monday, that kind of mini distribution. And guys, if you want to talk about distribution, tap 1, tap 2, tap 3, distribute. You know, a little mini distribution pattern that we saw there, that weekend trap, a weekend pump followed by distribution, followed by the expansion to the downside. Now, could we be seeing some local accumulation happening at our support level of the value area low? Right? We're at our value area low of our buying exhaustion channel range. Could we see something like this being a left shoulder or a tap 1, this being a tap 2? Now that we've broken market structure bullishly, if we make another small dip down to our golden pocket, that could be your right shoulder or your tap 3, and then you see this accumulation expand to the upside and maybe even, you know, take out some local highs. So I'll be watching for that. Right now, it's important to pay attention to the anchored VWAP from the low of the range, from our 57.7K lows, because you can see throughout the night and last night, it was acting as resistance. You get that crash down early this morning. Now we're breaking above, flipping it to support locally, which means locally we should make a test at this point of control around 64.1. All right. But should, let's see, what do you think about a short from the anchored VWAP? Okay, so that anchored VWAP is going to be coming in around 65K, 64,937-ish. Let's pull our golden pocket 786. You know, it would take us some time to get up there. So by the time we get up there, let's say we make a move, you know, break above this, flip this into support immediately, come up to your golden pocket, reject, maybe you see a higher time frame back test of that point of control, and then you come up again, you might see this anchored VWAP kind of getting close to the golden pocket or a little bit above that golden pocket. So yeah, it's a good zone. Do we have a naked daily in there? I think we have a daily and a naked daily in that general position. Actually, daily's a bit higher, but your naked daily point of control is going to be where that anchor VWAP is. And remember, naked dailies are volume-based support levels, so it's even stronger than a daily level. So seeing that we have a naked daily point of control pretty much in confluence with that anchored VWAP, yeah, that could be a possibility. Now, in order for me to take that short, because we would be reclaiming your range point of control, right, of your 2-month-long range. So in order for me to take that short from this zone, I would want to see some bear divs on like the 1 hour and under, maybe like the 15-minute chart having bear divs. Because if we break above this, we flip it to support and we continue up here. Yeah, we could look for the short, but you also got to look at, you would have a 5-wave impulse maybe up. So if this starts with an impulse to the upside, you still might get the short from there, but it might be a 3-wave corrective move to your local golden pocket before continuation up. So I would potentially consider a short from there if we have bear divs between the highs and, some bear divs between the highs, maybe some bearish money flow. But we'll have to see if we even make it up there, right? We'll have to see if we even get to that zone. But yeah, that is Puria Beat. That's a good mindset you have. A good technical way of thinking about it is looking at shorts from anchored VWAPs. Slick Shoes, welcome in as well. Good afternoon to you. We will check near Seargerm. We'll check near. We'll check some of the altcoins in just a bit here. One more question, if I can get time. Can you take a look at ETH? I'm trying to find, hopefully, a long-term position, either long or short, whichever shows itself before the 31st. Yes, Monty, we'll take a look at ETH as well. Now, on Ethereum, I actually bought some on spot at, I think, I'll let you know what the box was. It was at this box right here. 1570-ish. I bought some on spot down there. Ethereum is holding on. We'll go into Ethereum in a bit. Ethereum's holding on, but remember, guys, the basis of Ethereum, this first move up was a 3-wave move to the upside, and we did not take out the low afterwards. So unlike Bitcoin, Ethereum did not make a new low, and that means technically we have a greater probability of coming down to take out that low at 1505. That's kind of your short version of the story. Also, you can be looking at this as a flat, an ABC flat, where you're in your target zone between the 1.236 and the 1.382 to roll over and see that rejection. Actually, Ethereum looks like it's starting to develop a nice buying exhaustion channel now. So we'll start looking at that buying exhaustion channel when we get back to Ethereum here. But let me finish the chat and finish talking to you guys about Bitcoin real quick. All right. Decrypto, good afternoon to you. ETH looks like it might want to rip here. I took along from 1898. Awesome. Well, let's check that. Crypto Clan World, I'll give you guys my take on Ethereum in just a second here. And Monty, absolutely, man. Any questions you have, feel free to ask anytime, please. And that applies to any of you on here. Please ask questions if you guys have questions. Yeah, if we break above, I'm still watching for a short once again from an SFP of the range high. Me too. Static attacked. I am watching for this 67,300 or 67,255, 256. I am watching for the SFP of this in order to potentially take a short to come down and grab the lows at 57.7. On the higher time frames, we've been looking at a couple different structures we could see in here, right? Because we had that last 5-wave impulse, 1, 2, 3, 4, 5, to finish our lows, and we also hit the anchor VWAP. If you guys go back about a month into my channel, I was looking for this exact impulse to come down to take out and to actually hit we had a naked monthly point of control at 57,900, and we had the anchored VWAP, which was the most important support level. Bull divs on the chart on the daily time frame, right? And from the low, see, unlike Ethereum, this low is the low on Ethereum. Ethereum made a higher low, which changes everything as far as the Elliott waves go. So from the low, we either need to look for an impulse, a 1, 2, 3, 4, 5, and you generally want to break those highs, break daily bullish market structure, right? If you break above that on the daily time frame, you're breaking a daily lower high, right? You have your low, your lower high, your lower low, lower high, lower low. So you want to really break above 63 or 67,300, and even to close a daily candle above 67,300 would mean that we could see an impulse to the upside, right? A continuation to the upside. And that would change, of course, everything. But in our more bearish scenario, we're simply looking at another kind of sideways range where you are going to see that. And I know this has been very confusing for a lot of people with Elliott waves. It is even a little bit cloudy to me as well. But if you see, we have our big push up here, the 7 green daily candles in a row. We have the pullback, and then from here, that could be your A wave. The pullback is your B, and then you have your 1, 2, 3, 4, 5, a contracting diagonal in your C wave. So I know it looks very ugly. It doesn't look like a normal ABC, like A, B, C in here, but it could be a more complex ABC where you're rejecting, and the minimum target of an ABC is to take out your A wave highs. You could be rejecting and seeing an impulse down here. So the bearish scenario is that we finished a corrective move throughout all of this, and we're about to dump to the downside to take out 57.7. In the more bullish scenario, we would have to look at this range extending and hopefully seeing a breakout of the range highs. But if we do see the range extend and we make another double top here, I will absolutely be looking for a short to take out 57.7. All right. ETH scalp just took off. Is ETH pumping right now? How are the altcoins doing? Well, ETH looks better than Bitcoin, that's for sure. As far as the daily candle goes. All right, let me get rid of some of this. Yeah, and ETH is maintaining above the value area high of the range. So our sideways range on Ethereum, you broke, you can see how it was acting kind of as resistance. You had resistance, and here resistance. You fall back, you bounce from the value area low of a different range, and then you start to break above it. So as long as we're maintaining above the value area high, you could see this continue to grind up here. But if we go to Ethereum, and let me just kind of hide some of this stuff on the chart to make it a little bit cleaner. We're starting to see a bit of an exhaustive channel in here. Let me throw this there. I want to look at this channel 2 different ways. So I'll take it from the highs down to that low, and you can see we kind of are getting our sideways range in here. But I also want to adjust this channel from this high to our current high and bring it down to this low. And let's see. All right, the first channel looked a little bit better, to be honest. Another thing with Ethereum is we're staircasing to the upside, right? We kind of have a little range down here. You see a breakup. You see a range in here. You see a breakup. And now we're starting to form a range above. So we're just staircasing and ranging to the upside. It honestly, as long as that momentum continues, we could staircase up to around our main resistance, which is coming in from 2040 to about 2100-ish or 120-ish. Are we seeing any bear divs on the chart right now? Let me zoom out to our 4-hour time frame. And we want to look at these highs within this channel. This high, and this high. Now, if we're seeing bear divs, which we weren't between this high and these middle highs, but from these middle highs to our current high, you are seeing bear divs, and money flow overall is coming out as that channel is forming. Look at right when the channel starts, your money flow is coming out as that channel's forming. So you are starting to see that buying exhaustion. As far as NAMI goes, we do not have bear divs on the 4-hour chart. And I just want to zoom out to the 8-hour and see if we have, yeah, look at, guys, we do have some bear divs. Actually, pretty aggressive bear divs from the end of this. This is a nice quick move to the upside, and you can see from that momentum wave, you have regional bear divs coming in here, and then you even have some local bear divs coming in as well. But the most important ones to look at are these 3 highs within this exhaustion channel. let's pull this up full screen so we can see. Yeah, you do have high, lower high, lower high. You have the bear divs coming in. Money flow still looks pretty decent though. And because these bear divs are so wonky on this 4 hour or on this 8 hour, excuse me, we might see continuation and choppiness until we get up to like this golden pocket naked monthly point of control. You can see it's also your prior range POC. We had this range that clearly broke down, and now we're kind of back testing. The reason why we keep rejecting with these 3 local highs here, because you can see it's the value area low of that range. So try to get back inside the volume profile. Nope. But we maintain structure. Try to get back inside. Nope. Maintain structure. Try to get back inside. Nope. Maintain structure. Eventually, this might break through and get back inside of it. And then we would expect to come up to your POC and to your golden pocket area, which is, it is going to be a significant resistance, guys, because we have our prior range POC there, a golden pocket there, and a naked monthly point of control just above with a pitchfork band just above. So it is going to be a bit hard for Ethereum to break through that resistance above us. All right. Could see BTC collapsing at New York close. Bag holders on futures and spot still selling. Yeah, let's look at our open interest real quick, guys. Let's look at our order flow. So on our order flow, I showed this to you guys in yesterday's video, but the move up that we saw over the weekend was largely a short squeeze, right? It was a bull trap. And what I mean by that is, first off, let's cover the basics here. Your CVD, your cumulative volume delta. I know that sounds like a big, scary word, big technical term. All it is market shorts or market longs. So if your CVD is going up, that means the market, the aggressive participant traders, the market traders are longing. If it's going down, that means there's shorts coming in, market shorts coming in. So when you see your CVD, when we're pumping over the weekend, CVD is rising over the weekend. You can see it's a little bit flat here, but it's rising over the weekend. And what is open interest? Open interest is just positions opening or closing. So when open interest is increasing, that means new positions or new money is entering the market. When your open interest is dropping, that means positions are closing out. They're taking their profits out of the market. So when you're seeing a pump like this, you're seeing CVD come in, those market longs are coming in, but you see your open interest dropping here, that means it's not new long stepping in. It's not the bulls stepping in and trying to pump the price. It is really some late shorters that shorted late that are getting stopped out. And you can see we had some shorts coming in a little bit late, right? And some longs coming in at the bottom as well. But the push up over the weekend was largely a squeeze to the upside, a short squeeze to the upside, because your open interest was dropping aggressively that entire time, really all the way to the highs. Look at right where the highs are. That's where your open interest, the entire time it was dumping. So it was really just some shorts getting stopped out or taking profit, meaning that this move to the upside that we saw over the weekend wasn't necessarily a healthy move to the upside, a healthy and strong move to the upside, because strong moves are supported by new money and new positions pushing the price higher. Now, we saw the dump afterwards. We saw the dump to take out the lows. We made new lows locally and today. The move up that we're seeing so far from today's low, if we go ahead and look here, guys, it's seriously just a repeat of what happened over the weekend. You can see our lows here today, and open interest is dropping the whole time on the push to the upside. So it is, in some way, it's a mixture, because you can see your CVD is really kind of flat in here, or you did have some shorts coming in right around 63.8 up here. But the move we're seeing after today's low is on a decrease in open interest. So it's not a strong move yet, right? Now, if open interest starts coming in, if new position and new money starts coming in, it could become a strong move. But right now, at the moment, it's not a very strong move. All right. Yep. And we're looking at CVD right now. RP, thank you for that. Let's see if we see any bullish CVD divergences or bearish CVD divergences. So very, very locally, and I'm on the 15-minute chart. So let me zoom into the 5-minute chart. as of right now, it looks like we're seeing some bearish CVD divergence happening right now on the chart. So a bearish CVD divergence is when at your highs, you can see at our highs that we made, what, an hour and a half ago, we are making lower highs in the price action. And from that high, we are making significant higher highs in the CVD. So that is a bearish CVD divergence. Now, it is on a decrease in open interest, so it's not bearish absorption, which bearish CVD divergence, you should be paying attention to it, but it's not near as strong as a signal or a confirmation to actually execute a trade as absorption. And absorption, your CVD or your open interest, is going to be rising. And you can't have absorption if you don't have new money to absorb, right? New positions to absorb. So that's why absorption works so well. CVD absorption is one of the most tradable technical indicators out there, 70-80% hit rate. But CVD divergences are a little bit different and not near as much as a good signal or a hit rate on that action. But we are seeing some bearish CVD divergences very locally here in the past, hour, 2 hours. Yeah, it's pretty aggressive there. I guess we'll kind of have to see, guys. We'll wait and see. But this big decrease in open interest today, you see a lot of positions are now starting to close out since we got that little high earlier today, a couple hours ago. If we can see another bounce from the anchored VWAP, let's go back to Bitcoin real quick. If we can see another little bounce from the anchored VWAP and maintain above it, that's going to be good, in my opinion. So let's go to the 12-minute chart here. We broke above it. And actually, we didn't quite backtest it. Let me just go to the 15 to see if, yeah, we didn't quite touch it on the backtest yet. So if we see something like, because this looks like an locally impulsive, right? Very locally, like scalp trading impulse there. Now, if we see something like an A, B, C to double bottom and kind of hit that anchored VWAP, it could continue up here. And you would expect this to be like a 1, 2, 3, 4, 5, coming up towards, taking out some of this liquidity up above. So really the back test of the anchored VWAP is going to be important. Yeah, we'll look at Arrow. We'll look at Hyperliquid. What about Lit? How is it looking? Yep, Jonathan, we can look at Lit as well. So we have a few altcoins to be looking at. And we'll go look at those in just a second here, guys. I see what you're saying with the bear divs, but my perspective is the 200 daily moving average is a potential magnet for ETH right now, just north of 2100. Daily also has support at the 21 moving average. Okay, very interesting, Crypto Clan World. Thank you for that. So yeah, we do have our 200 daily moving average. Let me just zoom out to the 4-hour chart. Yeah, it is coming in, and look at Crypto Clan World. That's the resistance area, right? That's its general area, and maybe by the time we work our way up there, it's going to be a little bit lower. It's going to be at that naked monthly point of control or at the golden pocket just below it. So I would agree with you that $2,100 zone of resistance. It's really like from 2050 to like 2100. It's going to be a really nice zone to look for a short. I agree with that. So yeah, could we continue to pump up locally? Well, locally, your bias has to be bullish because we're maintaining bullish market structure, right? Higher low, higher high, 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 higher low. So maintaining bullish market structure. But you can see the trend is weakening. It's weakening with this buying exhaustion channel. So yeah, could we continue pushing up here until we do get up there? Yeah, absolutely. And actually, if we do that, look at those flat targets. If we go from the highs to the lows here and we put on our flat targets, but we, so that's between the 1.236 and the 1.382. In some rare cases, you can push up to the 1.618. Where is that guy at? Let's see. We'll just do this. 1.618. It's going to be also in that zone, right? At 2057. So even with a corrective move, and what I'm talking about here, guys, is a larger WXY correction here. And the reason why we would have to call it a WXY, because this first move looks like a three-wave move here. This looks like a three-wave move here. And then we would have to look at some sort of larger, you know, impulse. So we did have an impulse. You would be looking at a three-wave move, but inside that Y wave, you'd be looking at an ABC. So you'd be looking for an 1, 2, 3, 4, 5 maybe here for, or you could say, 1, 2, 3, 4, 5. That would be your A wave, maybe a flat here and a B, and then you'd be looking for, some sort of, it would have to be a contracting diagonal here. So this would have to keep contracting upwards in some sort of contracting diagonal in your C wave until you got up to that resistance area. But all of that would be in the context of a larger WXY, where afterwards you're expecting to dump to take out your lows at 1505. And once again, the highest probability here, now I'm just going with probability, guys, on the daily time frame. It is all based off of this very, very first move up from the lows. And remember, Bitcoin made a new low here. Bitcoin is more bullish because it did make a new low there. But because our lows on Ethereum at 1505, it starts with this three-wave move. It is not a good sign for Ethereum. And it does mean that we could crash down. It makes it more probable that we crash down. And we have a double bottom down there now, twice the liquidity. Anyone that longed here or in this zone, put their stops below the wick. They didn't get stopped out when it crashed down here because their stops were below the wick. Now, anyone that longed in here, they also would put their stops probably below that same wick. So now we have even more liquidity that is built up below this semi-equal double bottom on Ethereum. And that means you could see that big crash come in. Now, on the daily time frame, look at this as well. It is building some bearish divergences on Market Cipher. So this is more of an equal high, and actually we'll pull this up full screen, but look at within this channel that I just created here, this buying exhaustion channel. Remember the three highs that we're looking at that are important. This high, and then the high here. Let's now pull up Market Cipher full screen, and you can see here, so there's no bear divs between the first two highs within the channel. But between the second high and the third high, it's not quite confirmed yet because this is still going up. We could be creating some daily bearish divergences in here. You can see that, how, look at it, starting to roll over a little bit. We could be creating some daily bearish divergences between these two daily highs. So we just have to be careful here. And then also, just get rid of that. Also, the money flow looks like it's starting to kind of want to roll over. Not yet, not confirmed yet. Starting to look like it. Warning signs. Let's just say warning signs are flashing. And NAMI has already confirmed bear divs with this little bitty momentum wave here. Okay. Oh, thank you, R Pink. Guys, really quickly here, I do want to take a second to shout out the partner of the channel, the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can get up to 40% discounts on trading fees if you deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on the amount of volume you trade on the USDT futures markets. So that's not only Bitcoin, guys, but that's all the altcoins as well. You can earn up to $8,100 extra dollars. In my opinion, that's a great incentive to trade on the platform. They're also offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100, you get a 50% deposit bonus. That's over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonus up to $1,000 deposit and a 10% deposit bonus up to a $20,000 deposit. I've also partnered with BYDFI to create that Telegram community. It's a private community, but it is free. All you need to do to get in, join the community, join the Telegram, is sign up with BYDFI using my affiliate link in the description or rpink posted in the chat. Thank you for that, rpink. And deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses in here. But once you've signed up and made the minimum deposit, you click the Telegram link in the description, or rpink posted that in the chat as well. And in the Telegram verify channel, you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. And once you're in, guys. /verify and your user ID. I have a few other exchange partners. I have MEXC and Bybit. They're my KYC exchange partners. They're both offering some benefits, discounts, and trading fees, initial sign-up bonuses. And then I have Blowfin. Blowfin is offering VIP 1 for 30 days, some nice sign-up bonuses and initial deposit bonuses. And if you deposit $5, you can get a $10 voucher. So that's all available there, guys. It is a way to support the channel, so I do appreciate if you do use any of these affiliate links. Also, you can just hit the like button, subscribe to the video, to the channel, share the videos, all that good stuff. I do have one other partner. It is NAMI Trading, and it is this momentum and money flow indicator you see at the bottom of your screen here. And I use this for confirmations to enter and exit trades. I use it for a confirmation to enter a trade or exit a trade. So like as you're coming down to a key support level, you know, on Bitcoin, we were looking at this support, and I don't know if I think I deleted my big green box that I had down there. Look at, we nailed this range. Longed there. I mean, we've just shorted up here. We've been nailing this range, guys. It's just been great. Now that we didn't get up there. Anyway, we were looking for shorts or for longs down here because of the naked monthly point of control, because of our anchored VWAP. And you can see that NAMI had the nice bull divs, had bull divs on the money flow. So as we were coming down and hitting this anchored VWAP, I was looking for swing long potentials. So I use NAMI for confirmations to enter. And if I see those confirmations, it's more likely that my trade will play out. And since I've been using NAMI, my profit margins increased quite a bit. So if you're interested, I have partnered with NAMI to get you guys 50% off. If you sign up for the lifetime subscription, use discount code DIVINE50 and you can get 50% off. Now, I just talked to the creator False Profit, and he did give me a 25% off. If you want to just try the monthly subscription option, use discount code DIVINE25 and you can get 25% off. All right, let's now get into some of these altcoins real quick. We got wild. Okay, I'm going to scroll up to the top. We'll start at the top here, guys. I think Near was the first one to look at. So Near USD. Man, Near is, well, first off, remember, guys, when we started to lose the value area low, hold on, let me just get in here onto the 2-hour time frame. So we had our little triangle that was forming. That was what I just deleted there. A little triangle that was forming underneath the value area low. And if you guys remember, last Friday, I talked to you guys about that being a continuation consolidation pattern. We broke down from that little triangle and we made new local lows. Now, after that, you can see we had a 3-wave corrective move, and pretty much we're back testing the value area low. You tried to break back in, but the second you fell back outside of that, you expected to come take these lows out. I also told you guys that I was actually looking for a move. I'm really looking for a move down to 150 on Near, where we have a naked daily point of control, a weekly level, and it's your 1-to-1 trend-based Fibonacci extinction target. And if you remember Friday's live stream, I talked about how, yes, we might see a bounce at 160 because we have an anchored VWAP and a daily level there. We might see a bounce from 160 to kind of back test the value area low before coming down to 150. But Near does look like it wants to continue pushing down here. I am very surprised on Near that we did not make new high. We didn't take out 211.6. Like, I really thought, because we had a triple tops up here and we came so close, I thought we were going to come up and take it out, but we're not. We definitely are seeing a move to the downside here. And we could even say from that high, you're looking at an impulse, right? You have a wave one, a wave two. Now, all of this, we're in the third wave right now. But within the third wave, you can see we have a 1, 2, 1, 2. And it's because we have overlap between the lows of 1 and the highs of what would be a 4, right? There's overlap between those highs. So you now have to count this as a double 1, 2. We're in the third wave within the larger third wave. And then so, we would be expecting now more continuation to the downside, even locally. We would be expecting, and let me just grab our count so that you see this a little bit more clear now. Wave one, wave two, we're in the third wave, right? Our third wave might bring us to that daily sorry, that's a 200 daily moving average. Let me turn that off. Around our daily, maybe you get that bounce to back test either your range lows or your value area low. Actually, I would say probably around your range lows, and then you get that move down. But within this third wave, you're not done with it yet, right? Actually, the third wave could bring us down to 150, and then our overall impulse could bring us to 138, which is our macro golden pocket. It's not looking good though, right? So I can get rid of this green box now because first off, it did work. We bounced from the green box. We had a decent move to the upside. This golden pocket's been ran through. But you can see the sideways range that we've been in for the past few weeks is we're losing the value area low. We back tested it. We rejected. So we're now impulsing down and making new lows because we're losing this value area low. Okay, so we can take this range and hide it real quick. And the big thing that happened is from our highs exactly at 308, which, by the way, I warned you guys that we could see a major rejection there. You had an impulse, a clear impulse down here. You clearly broke market structure bearishly by taking out these lows. After breaking market structure bearishly, after impulsing down, you see your three-wave corrective move up. You reject from a lower high golden pocket. I mean, guys, we were looking at that on the other chart because Coinbase was having problems at that time, but we were looking at that short right there, right? Impulse, correction, and now we could even say that this is another wave one, another wave two, and we're breaking down. This could get really ugly for near protocol. It could get really ugly to the point where we're dropping. Another thing that we could say if we look at this chart here, well, look at reject from another lower high golden pocket 786 zone. Break this kind of ascending triangle to the downside. But what I would say here is you're losing your pitchfork midline that was holding that. That's this red line here. And if I zoom out, you're starting to lose your pitchfork midline. You're starting to come back inside this lower range. So depending on what happens, you can see we're at the value area high right now of this lower range. But if we fall back inside of it, you have a very high likelihood of coming to your point of control. Now let's pull our golden pocket from the lows to the highs. Golden pocket. And I just want to measure that move to the upside. Dang it, I have to redo that. So it's a 267% move. So you want to take that golden pocket and you want to make it based off log scale. Look at where your golden pocket's coming in at the point of control, right? So if we fall back inside this volume profile, you're expecting to move down to your point of control, which happens to be also where your golden pocket is. And remember, we were looking at this as a bigger impulse, a wave one, a running flat, and a wave two, your wave three here, a 4, and then a 5. And you can even see within the third wave, I have the count within the third wave there. So it's working out. The Elliott waves on macro timeframes are working out. Now, after you see a larger impulse complete, you're looking for generally a corrective move down towards the golden pocket, which is at 138. So near protocol could drop to 138 in the next week or so. We don't have bull divs. We have no bull divs on the daily. Money flows crossed into the red. Money flows crossed into the red on Market Cipher or on NAMI. And at least we still have slight bull divs so far on NAMI, but it looks like if we close today's daily candle red, they're going to get invalidated. We're at some local support right now, being the value area high of the range of our previous lower range here. But I wouldn't get too comfortable that this is going to hold. The other thing we could be looking at is some sort of contracting diagonal in here, where 1, 2, 3, 4, 5, if that's a contracting diagonal that ends, so if it's going to end soon, like at 160 or 150, we would say that this could be classified as a contracting diagonal in an A wave, right? Because you're looking for an A, B, C to come down to around 138. So that's an alternative count, but you would be expecting after this contracting diagonal ends, you would be expecting a pretty aggressive move up, because once you start to break a contracting diagonal, you generally will retrace pretty high on that B wave. You'll retrace to the golden pocket or the 786 and sometimes even the 886. So we don't have, I mean, if let's say that this value area high is going to hold, then you would be looking for a move up towards your golden pocket 786. And actually that golden pocket at 257 looks really nice because you also have that liquidity up there. That's assuming the low is in. And I don't think the low is going to be in quite yet, guys. Yeah, we'll just we'll wait to see if we see a break locally on here before we start looking at moves to the upside. For now, locally, I would be watching the back test of the pitchfork as resistance. 172 now is going to start becoming resistance. And you can pull that local volume profile of the sideways price action. You can see you had your aggressive move down. Now, remember, what is a fixed range volume profile? It's in the name of the indicator. You're taking a range, a fixed range, and you're measuring the volume of that range. So clearly, this first move down here is very impulsive to the downside. So after that move ends, you can take your volume profile, you can kind of pull sideways and look at the range. Well, we're losing the value area low of the range. So you expect to now take out your range lows, which in this case would have been the ones that we just took out yesterday. Because we didn't see an SFP of the range lows, now we're expecting to come to our previous range, which is what we're at right now, the value area high of your previous range. Let's see if we see any bull divs on the chart here, because you are starting to see some bull divs. You can see kind of this choppiness in here, bull divs, but money flow is bearish, and bearish money flow a majority of the time will overpower a single drive of bull divs. Now, NAMI actually looks pretty good. Look at this nice rounded multiple drives of bull div. Money flow kind of bull div in here as well. Let's go to a higher time frame on the 4-hour, and let's see if we're seeing some 4-hour bull divs. Very, very slight 4-hour bull divs on NAMI, or excuse me, Market Cipher. But money flow is just crossing back into the red, and you do not have 4-hour bull divs on NAMI. So I'm not too keen on a major reversal here, guys. Yeah, unfortunately, it looks pretty bad that we're dumping outside of our value area low aggressively here. Below us, we can look at naked daily, naked weekly points of controls. Let's see if we have any naked weeklies below us. Nope. Naked dailies below us. Not until we get down to like 120. Or actually, excuse me, that was a naked weekly. I'm sorry. You do have a fresh naked monthly coming in at like 155.6. So that actually is kind of important right there at 155.6. That might be the end of the contracting diagonal if it's going to be a valid contracting diagonal. I set an alert there, so I'll let you guys know what it looks like when we get down there. That's also probably going to be, okay. Interesting. I mean, with the value area high and the equilibrium, the 0.5 is just considered the equilibrium, right? So of this entire impulse to the upside, you're coming to your equilibrium, which is also around the value area high of your previous range. So maybe we wick past it a little bit to hit the naked monthly and then reclaim. That would be kind of bullish. And if we don't see that, you're coming down to 138 to 132, where the point of control is at 135.6. All right, I know I took a long time on near. I'll try to be quicker on some of these guys. I do need to leave in like 45 minutes here. Okay, next one. We did ETH a little bit already. Let me know if you guys want more on ETH there. But we kind of looked at ETH already. Arrow. We can look at Arrow. I know it's been crashing pretty aggressively. Oh, it's starting to pump up now. So Arrow's been in this nice descending channel. So one of the things I don't like about Arrow is we front ran this 63.3 cent double top. It's like a perfect double top right here. So we have twice the liquidity here. And we pushed up, we were starting to break out of your larger volume profile. But now we've fallen back inside not only your smaller volume profile. So let me hide this one real quick. This is the important volume profile to look at, right? From the lows. You kind of have this sideways and corrective move up from the lows. You're back inside your value area high. You can see that we're back inside that value area high. Excuse me, that is, yeah, the value area high of the range. And look at this big gap in volume here. So that needed to hold kind of. This high volume node of support needed to hold. You needed to come down here, bounce, and then continue up. You didn't. You fell back inside of it, which is very bearish in some ways. You even fell inside of it. You back tested it pretty much to the dollar, and then you continue down. So I would expect continuation down to our golden pocket. Our golden pocket's coming in at 39.78 to 38.91-ish. And we're just chopping within this descending channel down there. Now you can see on Arrow, we've been trying to break out of that descending channel, but wick. We're trying really hard to break out here. And if we can break out, you would want to break above that value area high, flip it to support. And then in that case, I would suspect we're going to come take this liquidity in here. But if we don't, if we roll over here, which I think is the higher probability, we're going to roll over and actually come hit that golden pocket below us. Now, we have a smaller range we can look at, because you can see within just kind of this, we had a range in here that we were, now we're still pretty much inside that range. So we can take a volume profile of that range as well. Let me just get rid of this. Yeah, and we're flirting. So right now we're seeing a bearish backtest of that value area low and a test of the channel. It's very simple, guys. If we do end up rejecting here, I would expect new lows into like the golden pocket. If we can actually see a breakout, which it's not seeing it's trying to reject, but it's not yet, right? It's just chopping around here. If we can see a break back up inside, you're going to move up, and I look at right where that value area high is. It was going to take out that liquidity I just talked about, like around the second pivot of the channel. Because remember, with descending channels like this, when you break out of them, you will often sweep the liquidity at least up to the second pivot of the channel, but a lot of the time you'll sweep the liquidity that the entire channel has created. We can also pull our golden pocket. And yeah, look at your golden pocket is going to be right into that value area high. Now, because this is more than a 30% drop to the downside, I believe it's going to be more than a 30% drop. It is a 33% drop to the downside. You do want to shift that golden pocket to log scale. And you can see it just shifts it just barely, but it's right in, it's a zone, right? It doesn't matter if we shift it or not. It's all this zone here. You have major liquidity in here. You have your golden pocket and you have your value area high of this range. Money flow doesn't look the worst, although it's starting to roll over. It looks like on Market Cipher, that's not a good sign. You did have some very nice bull divs on this thing. Look at the bull divs you were seeing coming into that 1.236. Look at these bull divs. So let's go on to the daily time frame and let's see. You do have some daily bull divs on NAMI here. Okay, so we might see a break out of the channel before, but I would suspect we're going to come down to our golden pocket. We can also look at our points of controls, our naked points of controls. Okay, that's for this month, so we're not counting that. At least for a couple more days, right? We have a naked weekly point of control at the bottom of the range, and then unfortunately, we don't have our next naked weekly until we get down to 35.8, and that is going to be around where your 786 is as well. So if we lose the golden pocket, next big support level would be this guy in here. That is going to be your naked weekly 786. And above us, we do have a naked weekly before the golden pocket. What I would suspect if we're going to break out of this thing, maybe a small rejection to backtest your range POC and then come up there. Yeah, even on the 15-minute, so like I just said, it doesn't look like we're rejecting. Look at this little channel that we have, right? You have this little channel in here that's just, it kind of pushes up into it. You see that channel, and then generally you'll get another push up. So we might actually see a breakout here. Let's pull that small channel, and we will look at that. Come on, right there. Sorry, guys. Let me. Nice little parallel channel. You can see that 15-minute parallel channel in here. But we're chopping around the value area low, and that's we need to break out of this channel. We need to break out of this channel and come up to that POC. If not, we're coming down to your golden pocket. On the 4-hour time frame, like I said, we have that larger pink channel, and we really need that pink channel to break out. But look at rejection, 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 rejection. Eventually, if we keep rejecting the top of this channel, it is going to roll over and come down to this golden pocket. Okay, lit. Oh, okay. I don't know if I've ever looked at this thing. Not a whole lot of price history, but it does look like it's in a nice uptrend here. So you came down to around the 786 here. Yeah, this could be a nice little, 1, 2, all of this being a third wave here. And then we're going to be pulling back in a 4 before seeing a 5 to finish the impulse on the daily time frame on this thing. But we would have to look at this third wave. So from here, you have a 1. There's a nice little 3-wave corrective move here and a 2. You would have to say this is another 1 right here. And this is some sort of running flat in a 2. So it's a double 1, 2 impulse. You have your 3. So we would need a 4, 5, 4, 5 to finish your third wave, to finish the 1, 2, 3. And then you would expect a larger 4 and then a larger 5. So it does look like we could see some more upside as far as Elliott wave counts go. I will throw on our bullish pitchfork now. We'll go from the lows to the highs to these higher lows in here. Yeah, and you can see that this pitchfork is being nicely respected, rejected from the top, rejected from the upper band, rejected from the upper band. But what is scary here is we're starting to lose your midline. So you see you rejected, kind of formed that range in and around the lower band or the upper band. Came down, you held support for a bit on the midline, but then you lost it. So if this is the case where we're seeing this 3-wave move and we're going to reject here, you would expect to come down and make new lows. And you might even come down to the bottom. But what I'd be paying attention to on this is that corrective range, this corrective range in here. Yeah, this is the spot, guys. If either we're going to reject here at this value area low and pitchfork midline, and then you would expect to roll over and take out the lows, or if it's going to break above the midline, you're probably going to see something like this, a break, small rejection, back test, and then you would probably expect to continue up. And at that point, you would expect to probably continue up to take out the highs. Yeah, but there's not really too much other rangy price action. You could pull a volume profile. Now, I never include like the listing, the very beginning of the listing, but this kind of in here is a sideways range area. I mean, it's a trend and then a trend the other way. So it's this volume profile is not going to be the best to look at, but you can see the majority of the volume in that volume profile is towards the value area high POC. And so I would be paying attention to around that 177 area. Let's see if we have any naked points of control in that. Yeah, you do have that naked point of control there. Sorry, 185 and then 170. You don't have one at 177. Okay, interesting. So very locally to pay attention on lit, you have a point of control at that internal liquidity, these internal highs. You can see at whatever that is. Let me mark it. At 241.9 or like 242, let's say, you have a naked daily point of control and you have liquidity resting there. Yeah, 242. And then you have your liquidity right into that naked daily. So I would definitely be watching that for a potential short. Yeah, there we go. And then below us, because if we do reject here, you're expecting to take out that low. I'd be looking at the naked daily point of control at 186. And I believe the naked weekly was at 185. 189. It's a relatively new coin, so momentum could continue up for a little bit. We don't have any information on Market Cipher, but Nami money flow looks decent here. Let's go to like a 2-day time frame. Yeah, I would say money flow looks pretty decent. No bear divs on the chart, at least. You're pretty much at your test, though. If you reject in this general zone of the pitchfork midline, you're going to roll over and you're going to take out that low. All right. We had same setup failure from 82K to 60K. Caught even more off guard. Yeah, Billy Thero, though, we were looking at that anchored VWAP from 98K. Man, that was a good short right there. Does it look like a wave 1 complete on BTC and starting down wave 2 down for a 5-wave move down? Okay, let me see. J Sim, are you talking about on lower time frames or on the higher time frames? Because yes, I think I understand what you're saying. If we're looking here, this is a wave 1, a wave 2, and maybe we're going to see a bigger move down here, or if it's an ABC, it could be done, and then you would expect to take out that high at 67. I think you're probably talking about lower time frames. So within this move down, could we count a wave 1 in here? Yeah, you do have that kind of that 5-wave move, right? Generally 1, 2, 3, 4, 5. So if you're looking for a wave 2 correction, you can pull that golden pocket and you're looking around 64.3-ish, which also happens to be where your point of control is a little bit below that. It's at 64.150. Yeah, right around your 0.5, your equilibrium. Remember, we don't have to come up to the golden pocket. Wave 2s are pretty confusing because you can even reject from the 382. And in a strong trend, the 382 will reject you. We're already kind of fighting. I would say we're at least going to make it up to this POC, in my opinion. Yeah, please do, guys. Remember, if you do want to join the Telegram, all you got to do is sign up with BYDFI using my affiliate link. Once you've done that, deposit a minimum amount of $100 or more, and then click the Telegram link in the description and type in /verify in your user ID, and you can get into the Telegram. And thank you, Crypto Wanderer 5813. Thank you for letting people know about that. Could we check VVV? Yep, we could do VVV. Well, we have a pretty nice weekly range on this thing. You can see kind of this weekly range in here. You might even include that price action. Let's see here. You're breaking out of the value area high. You're back testing it on the weekly, and you're still continuing up locally here. The one thing I would be careful for is if this is going to be a 3-wave move, maybe take out this internal liquidity. You could roll over and roll back into it. So let's see if our targets are there. Let's see, 39.42. Hold on. Yeah, you have your 1-to-1 at 43 to like 46. Let's pull a golden pocket also from the range highs to the most local weekly lows. All right, I would be very, very careful of, remember, anytime you see a liquidity grab into a golden pocket, pay attention to that. So we have a weekly high sitting here at 41.33 and into your golden pocket at 41.35. So I would really be careful for a rejection there. Now you can see for 2 weeks already, 2 weeks ago, we hit the 0.618 of the golden pocket. We only saw a small pullback. So let me zoom in on the daily so we can get a better look at this. You rejected your golden pocket. You pulled back, you're back testing the value area high and you're bouncing. So the fact that even though we were rejected from the golden pocket, the fact that we came down and back tested and were holding on the bullish back test, you expect to take out that local high from a couple weeks ago. So I would be at least expecting to come up. But if we see something like this, SFP, and then you start to drop here, you could be looking at that. Look at the buying exhaustion channel, guys. You have the aggressive move up followed by the buying exhaustion channel. So I would be very careful because on the daily time frame, you can also see 1 drive, 2 drive, 3 drives of bear div. 1 drive, 2 drive, 3 drives of bear div. And if you make another new high, look at, you could be putting in another drive of bear div into that golden pocket and that liquidity grab. It is starting to see that buying exhaustion channel. Now on NAMI, you don't quite have confirmed yet bear divs on the daily. Well, first of all, you'd have to take out that high at 41.08 to even get the bear divs. But yeah, I would be watching that 41.35. Watch the SFP of 41.33 into the golden pocket. Now, if you break above that, we can even look at a smaller range. Okay, so behind that, this kind of bottoming range here, because this almost does look like an accumulation. Here's your tap 1 here, tap 2 here, tap 3 here. If this can break out, you're going to see expansion. You're probably going to make new highs on this thing. So we want to look at this bottoming range. You can see how this is kind of trendy in here. And then from that, we go sideways for a bit. Yeah, and it's a nice sign that, look at, you broke out of the value area high, back tested, new local highs, back tested again, new local highs. I would be very careful. This is starting to look like that buying exhaustion channel in here. But you are breaking out of the value area high here and flipping it to support. So, and of course, we just did that on the higher volume profile with the value area high being here and flipping it into support. Where'd he go? See that? So yeah, it's looking smaller volume profile. You break out, you flip it to support, you make new highs, right? Now we have our larger volume profile. Break out, flip it to support. You're expecting to make new local highs. So I would just be looking to come up to at least 41.33. If you don't SFP 41.33, you could come up to at least 43. 43.44. Yeah, and then honestly, I would be looking at kind of this weekly in here. You have this kind of these weekly highs right at that 43. All right, and we'll look at some naked weekly points of controls. Oh, it's not going to go back. Okay, we'll have to look at naked monthlies. Wow. Yeah, you don't have much, guys, in above us as far as points of control goes. There's no points of controls. If you break above this golden pocket at 41.35, I would say that internal liquidity around your 1-to-1 is your only other big resistance, right? You have resistance from this lower high liquidity level. If you don't SFP that, then you expect to come up to this liquidity level, which is going to be right around your 1-to-1. And you'd be looking at this as some sort of corrective move and then potentially a rollover. So yeah, that's the two zones I'd be watching. This guy and 41.35-ish. All right. I know there was something else I'm missing here. Hype. Oops. Man, well, first off, for the past couple of weeks, I've been telling you it's very likely that we come down to 52.5. Go watch my live stream. The last 2 Fridays we've covered hype. I've said it's likely we're going to continue down to hit this 52, 55 area. We broke. So let me just get rid of some of this local stuff now, because obviously it's changed with new lows. Oop. We are hitting our 1-to-1 target at $55. And I said we might see a small bounce from here. It is the bottom of a channel that we were looking at. But pretty much we rejected from our 786. We had the short there, by the way. I think that was also a naked daily or a naked weekly point of control there. And we really need to watch for 1, 2, 3, maybe the 4 back test the value area low, and then we see a 5. This could start to aggressively drop here. What we've been looking at inside of this sideways upper range in here, we've been just paying attention to this upper range. The on Friday, we came down to the value area low. We bounced, but then we rejected from the POC. So especially when the POC is so close to the value area low and you reject, you're expecting now to take out your range low, which is 52.55. 52.58, excuse me. So yeah, on the higher time frames, I would be really watching for the next few days to come down and grab liquidity. You can see I have an alert set into the golden pocket, and this golden pocket was front ran here. If you guys remember me telling you that last Friday, it was front ran on this low just barely, but you can see 52.46 is where the golden pocket starts, and we stopped at 52.58. We also have our 1.236 trend base Fibonacci extinction target in there. Now, let's just look at this. The initial move down, it is, let me zoom in on this because that's hard to see, 8 hour. It's a bit confusing because of this little bit of price action up in here. Because could you say, because the high is obviously here, a 1, 2, 3, 4, 5. Your second wave came extremely high, but it didn't invalidate it by taking out the high. So yes, there is a valid count for a 5-wave move down here. You could be looking at some sort of corrective move. Actually, this would be the corrective move somewhere like this. No, it did take out the high. I'm sorry, guys. That I believe I was looking at a WXY correction. So 3-wave move here. W, you get your X, you took out the highs, it's in a flat, and then now you'd be looking to come down to the lows. So you'd also be looking at a larger move, a 3-wave corrective move to take out the lows. Either way, we're looking to come down to 52.5. And let's just talk in terms of volume profile. If the Elliott wave is a little bit unclear, you're just going to pull that volume profile. We've lost the value area low. We tried to bounce from it on Friday, but we rejected the POC. And now, because we're losing the value area low, you expect to take out the range lows. Sure, we might find a little bit of support here at 55, but I would be expecting back test the value area low and then continue down. Now, on the daily time frame, we are starting to see some bull divs possibly be created here. You can see on NAMI, we already had some bull divs from this low to this low, bull divs. And then we created more regional bull divs from that low to this low on Friday. Now we could see, it's not confirmed yet, but we could see another drive of bull divs. So SFPing 52.5, we might have some nice bull divs on the chart. Money flow starting to curve to the upside. It could give us a nice setup. I am looking to long that if we get the SFP. Only if we get the SFP, I'm looking to long that. And if we don't hold 52 to 51-ish, you're going to see a pretty aggressive drop on this thing. I would think you're going to drop to 44. You have your previous range value area high there and a naked weekly POC. And there's nothing in here that is really going to support you from going down. If it doesn't hold, then you're going to see a move down there. We can also look at where that 1.618 is, because if it's not going to hold, we're probably in an impulse to the downside, and you would be looking at 46 is a where your wave 3 could end. So we'd be looking at something like this, guys. A 1, 2, 3, 4, 5, and probably bouncing overall around 44. One hour seeing some slight bull divs that could bring you up to backtest the value area low of the range, which is going to be at 57.16. Very slight, weird bull divs. Bull divs here. Let's look on the 4 hour. Yeah, you do have some bull divs here. So you can see lower lows, higher lows on Market Cipher. Not on NAMI, though, interestingly enough. But you do have some bull divs here locally. Yeah, I expect to drop to 52, guys. 52.5, maybe even 51.2. Okay. Thank you, Diogo Carvella. I appreciate the kind comment, man. Yeah, we can look at Tau for sure. Well, Tau did come down, and I let you guys know about this in the Telegram yesterday as it was happening. And man, I told you I wasn't going to take the long, but that would have actually been a good scalp long right there. So we SFP'd that low, but it was such a shallow SFP of that low. It was more of a double bottom of that 183. And in the Telegram yesterday, as soon as we SFP'd it, I came in on the Telegram. I said, guys, the alert's going off for Tau. We are hitting those lows, but I'm really waiting for 176. Like that 176.7 to 176.2. But it is the start of our support box. And you can see we had the initial aggressive move down, followed by the selling exhaustion channel that's coming in. And we have the midline, the pitchfork midline as our support there. So we are seeing a nice strong bounce from that liquidity grab. Even locally, it does look like you could be like in a 15-minute impulse, right? Like a 1, 2, 3, 4, 5, and you want to take out those highs. You want to at least take out these local highs from Monday. So if you can take out these local highs, you could probably see a bigger move to the upside. If we don't, if this is just another A, B, C, and you're going to reject from this value area low that we're back testing, then I would expect to move down to 176. But we'll pull the volume profile of this kind of sideways corrective range in here after the impulse ends. So we'll go here. Yeah, it's going to be a bit tough on the lower time frames to analyze this because you have your larger range value area low here. You see this is of a much larger range, so it's an important high volume node, right? You can see this value area low of your much larger sideways range. You're at the value area low right now. Actually, when you zoom out to the 8 hour, it's showing you're above it. Let me go to the 4. Yeah, you're above it. Okay, I don't know why on the 1 it shifts it up to where your point of control of your local. Anyways, this local range is more relevant right now anyways. So let's see if we can't get that move up to the POC at pretty much 197. 1, 2, 3. If you can reject, see only a small rejection, and then you want to take out those highs at 201, 201.24. If we can take out the highs at 201.24, it would be a pretty nice bullish break in market structure, right? Because you have your lows, lower highs, lower lows, lower highs, lower lows. If you can break those 201.24, now all of a sudden Tau is looking a little bit better for a bigger move to the upside. We can pull a Fibonacci golden pocket from the highs of this local range to the lows. And we want to put that, I'm almost positive that's more than a 30% drop. Actually, it's only 16, so we keep this on not log scale. Okay, so we will pay attention to your golden pocket at 205 to 206. And I like that because even within this larger range, kind of sideways, that's your selling exhaustion channel. You have a even smaller range. Actually, it's like this area here. And you can see the highs, those local internal highs, are right into your golden pocket. Anytime you see a liquidity grab into a golden pocket, pay attention. No. I'll set an alert there too, because we might be able to get a short if we SFP this into the golden pocket and start to reject. Now, in that case, we would be flipping market structure bullishly by breaking lower highs, lower highs, lower highs. So if we do come up there, let's say we finish one impulse there, correct, and then we come up again, SFP that, I would be looking for a short, but it would be a short to make a higher low overall for continuation up, because you'd be breaking market structure bullishly by taking out this and taking out this. Yeah, and actually Tau, look at the bull divs you're seeing. 1, 2, 3 lower lows, higher lows here on Market Cipher. You have bull divs on NAMI on the 8 hour. Daily time frame, you do have the bull divs here on the daily as well. Actually, look at this on Tau on the daily. Let me get rid of that. So you do have some very nice daily bull divs followed by another little trigger wave hidden in there. And you're at your pitchfork midline. You can see here on the pitchfork midline, you have not closed a daily candle below it yet. Yet we wick down to it. This was yesterday afternoon for me, but it was, you know, considered this daily candle. It was Yeah, but look at that. Nice holding support still on this midline. Now, could we continue to chop here, guys, for a bit? Like a couple more weeks even, and then maybe see something like that? You could. You could continue this selling exhaustion channel for a bit longer. But if you break out of that selling exhaustion channel, you're going to expect to take the highs at 205. I would definitely be watching that 205 to 206.7 as a potential resistance. And then below us still, guys, if we do come down below us, that 176.7 to 176.2, naked weekly point of control and a daily level. But you're finally hitting your zone of support. And remember, because this move was a three-wave corrective move, we were expecting to take out that low. We finally did. Took us, what, a month to do it, but we finally did it. And it was all based off this three-wave move, just like with Ethereum. This is what I'm concerned about with Ethereum. You had a three-wave corrective move, and then you start to fall back inside your volume profile, or you start to lose golden pocket. You're expecting to take this out. Let's go to Ethereum here. And this is the very concerning thing about Ethereum. I know we can get a move up to 2100 first, but this very first move, three-wave corrective move, and we didn't take out the low. It's just not looking the most bullish for Ethereum on the daily time frame. Could we come up here first? Yes. All right, let me scroll down to the very bottom of the chat. Okay, I got to check Bitcoin real quick. What's she doing? Really nothing, guys. Bitcoin is chopping between our anchored VWAP, but you can see we finally hit the anchored VWAP now. So we're back testing the anchored VWAP. The fact that we backtested the anchored VWAP, I said at the beginning of the stream, it's likely that we come up to this 64 150-ish zone. It's our point of control of the range. 64 150. I really do think we're going to come up there and at least hit this POC. Now, depending on what happens when we hit that POC, we could continue down. If we hit this POC and then lose the anchored VWAP again, even on low time frames, I would expect the continuation to the downside. If we can flip this POC to support, then we're likely to continue up here. And then we would have to look at, is this some sort of contracting diagonal in here? Some sort of motive wave, right? Depending on how much this goes up here. If it continues all the way up to value area high, we could say 1, 2, 3, you know, maybe even break out of that, take out your local highs, or 4, 5 to take out your local highs. But we want to change market structure bullishly now on some of the higher time frames. We did change 1 hour market structure bullishly. Let me go to the 1 hour. We broke these lower highs. It changed market structure. You can see even after breaking them, we flip them to support. Interesting how our POC shifted down right there. Because earlier in the stream, it was at 64 150. I don't know what is going on, if this is a trading view thing that's bugging. Or if it actually just changed. Yeah, so our smaller buying exhaustion range is a little bit higher. And earlier in the stream, this 6-week long or 8-week long range was a little bit higher too. But I mean, guys, we see this so often. The big initial move followed by the exhaustive channel. We still have not lost the exhaustive channel. We are still at the bottom of the exhaustive channel. And until we lose it, that's when you could see an aggressive dump. But you can see if I turn on that exhaustion channel, where do we bounce from? The bottom of the channel. We also bounce from the value area low of our range. So the bulls have to step in here, guys. If you are bullish on Bitcoin, be the sacrifice. Buy the Bitcoin. I'm just kidding. But Yeah, we need to get up, guys. We need to get up here. All right. Mr. Rekachun, welcome in, my friend. Thank you for being here, and thank you for the comment, man. Pitchfork Maniac. I love pitchforks, dude. That is a compliment to me for sure. Okay, guys, I've only got about 5 minutes left. Am I shorting here? No, I'm not shorting here yet. I might short 64.1 depending on how we get up there. 64 150-ish. If we come up there with some low time frame bear divs, like low time frame bear divs, I might think about shorting it. 64 140-ish, 64 150-ish. But what I would want to see for a short, I would be looking on the 15-minute and under. I would want to see bear divs between this high and then coming up to the POC. And it doesn't look like, well, you did have some bear divs here that played out with a move down, this move down. We would have to see new bear divs now. And I guess we're kind of seeing them, but we still haven't taken out the high yet. So they're not confirmed, right? It doesn't look like we're going to get a decent short from there. Yeah, maybe. 5 minute is showing, if we come up there, the 5 minute is showing we could see some bear divs and even local bear divs. Okay, Ave, I can look at Ave very, very quickly. Guys, please do hit the like button if you did get any sort of insight into the market from this live stream. Please do subscribe to the channel, all that good stuff. Ave, oh wow. Okay, so Ave selling exhaustion channel down here, right? Let me just get rid of some of this. Selling exhaustion channel. You saw a fake breakdown from that channel, but then you were able to get back inside that channel, back test, and let me see, what is this POs, or what is this golden? Okay, that is no longer relevant. But you can see you got back inside the channel, you back tested it, you broke up through the midline, you back tested the midline, you came up to the top, and now we're starting to break out of the channel today. Look at this is a daily time frame candle. So 2 days ago, we closed above the channel. The next day and today, we back test the channel and it's holding. Now, this does look like some sort of contracting diagonal to me, so I would be very, very careful here. Because if we're seeing, actually this 1, 2, you'd have to look for 3, 4, 5, something like that, or I would just throw on another one of these guys. Yeah, because look at your daily low today. Back testing this is your selling exhaustion channel, right? You have your big push up. Now you're starting to see selling exhaustion in here. Buying exhaustion, excuse me. But you're back testing the midline and the breakout of the bigger descending channel and the midline of the smaller ascending channel. Let's go in onto the 2-hour time frame. So looking pretty good there. Look at this midline. Break above it, back test, new local highs. A higher time frame back test, we should expect to make new local highs above today's high. Or was that yesterday's high? Sunday's high, excuse me. And the fact that on the daily time frame, look at that. Back test holding. We might come up to the top of the channel, which would be, I would say, around 106.3, where we do have some liquidity. Now, we're so close to taking out that liquidity, I would suspect because we bounced in this buying exhaustion channel, we bounced from the midline, I would at least expect to come up to 103.47 to take that liquidity out. Yeah, and look at that's also going to be your previous range. This was kind of a accumulation range in here. You've fallen back inside of it. You pretty much bounced from the value area low. There was some wickage past it, but you can see this value area low. You bounced from around there. Now you're coming up to the value area high of that previous accumulation range, and it's right at that liquidity, 103.6. So if you SFP that and you start to fall back inside of this pink channel, you would probably be expecting a move down to the POC, which would be 85. And it would also take out all of this liquidity that is building up. Higher low, higher low, higher low, higher low. So just be careful for the SFP at 103.47. Actually, what I will do is I will set an alert and let you guys know in the Telegram if I am available for that. It might happen while I'm sleeping. Yeah, guys, full moon pump. That's right, our pink. I forgot it was the full moon, huh? And tomorrow we do have FOMC. So an important day tomorrow, guys. We have to be aware that I think tomorrow could be a fun day for trading. But thank you guys so much for everything today. Please do hit the like button. I will be live streaming Thursday and Friday at 3 p.m. Eastern Standard Time as well. Tomorrow I'll make a video around market close. Otherwise, join the Telegram. I will try to keep you guys updated in that Telegram. I set alerts on some of these altcoins. If any of those alerts go off, I will let you know. Gosh, the Tau long yesterday, the Tau trade from yesterday, the SFP, I told you guys actively I wasn't taking it. Now I'm kind of wishing I did. But you always have another trade, so no worries there. I appreciate each and every one of you. Our pink mods, Crypto Wander 5813. Thank you guys also.